Hello, hi everyone. Welcome to be here this afternoon. It is a pleasure for me to moderate this panel. My name is Simone. I'm the managing editor for KrAsia. We are a digital media company that reports on the most technology-driven businesses and trends in the world's emerging market. And today we have here with us Amra and Naidoo, co-founder and general partner of Accelerating Asia, Will Klippgen, co-founder and managing partner of Cocoon Capital, and Jussi Salovaara, co-founder and managing partner for Antler. Thank you all for joining us for this panel named Venture Capital, More Than Just Funding, for the Boom 21 conference by Wild Digital. I have 3 questions prepared, and I'll be also taking some questions from the audience later on. So without further ado, I'd like to first allow a couple of minutes for each one of you to better introduce yourself and your firms. Perhaps we can start with Amra, please. Thank you.
Sure. Thank you so much for having me here today. So I'll be quick. Accelerating Asia, we essentially have 3 parts to what we do. We have an accelerator program that works with pre-Series A companies from around the region across all sectors, and we run this program twice a year. We also have a venture fund that invests in the startups that we work with through the accelerator program. And the final part to what we do is we actually have a consulting business that works with multinationals, governments, development organizations on how they engage with the startup ecosystem. So outside of all the things that we do at Accelerating Asia, I'm also the APAC lead for something called Shaper Impact Capital, which is connecting impact investors and social impact startups together. And if you're a podcast fan, I have a podcast as well called the Doing Good Podcast. So it's all about different ways people can create change. So that's me. Thank you for having me.
Thank you very much, Amra. Will, would you like to continue?
Sure. Thanks for inviting us here. So Cocoon Capital, the fund where I'm managing partner alongside Michael Blakey, we are basically an early stage enterprise tech fund. So we take early stage companies coming out of, fantastic accelerators like Accelerating Asia, Antler, others, or just directly to us at the seed stage, and we help companies grow towards the Series A raise. So typically that's a journey, it's around 18 months. We are a slow investment speed fund. We only do up to 6 companies a year, so we kind of allocate a lot of time to mentor founders. We invest across Southeast Asia. So we've been going on now for 5 years almost, since 2016. We have around 24 portfolio companies and always looking for more.
Perfect. Thank you very much. Jussi Salovaara, would you like to continue?
My pleasure, Simone. So I'm one of the founders of a company called Antler. We are a pre-seed venture capital firm, global, and we have 13 locations live, but we are born and raised in Singapore, which is our global headquarters. I'm also the managing partner for our Southeast Asia fund, from which we made around 80 investments in the last couple of years, and proud to call, for example, Cocoon Capital as one of the co-investors in one round, hopefully more to come soon. We are cross-sector, and like Amra, we also have a podcast that I'm running. I'd like to think we're doing good as well, but ours is called Antler VC Cast, so check it out. But that's Antler in a nutshell, and we're also going to build more later stage investment vehicles as we go along. So right now, large part of the focus is on early stage, and what we do specifically also is provide aspiring entrepreneurs the opportunity to find a co-founder. So where Amra and team, I believe, would often take an existing team and help them accelerate their growth. We start even earlier, and we start from a pre-team situation where we take individual founders and match them up. So if you're looking to find a co-founder, build a business, reach out to me.
Thank you very much, Jussi. All right, then let's start with the first question. And well, the first one is actually like, let's go into the basic a little bit. Like the name of this panel is venture capital, more than just funding. But I mean, why is that? Like, can you tell us a little bit more about when we talk about venture capital investment for early stage startups and well accelerators? Is not just about the amount a certain company, a certain startup can get, but more about an entire ecosystem that firms like yours provide to funders, right? Amra, you already explained a little bit in your introduction, but maybe you can explain a little bit more about, all the ecosystem that like companies like yours can provide to funders.
Yeah, I think this panel is actually really interesting because you essentially have pretty much the whole early stage pipeline here, right? You have an idea, you're an individual, you'll go to Antler, you maybe come out, get your pre-seed funding, you have your team, and you'd come to Accelerating Asia, and then we'd pass you on to Cocoon afterwards. So you have kind of the whole life cycle here. But I think that's an interesting question, and I come from a perspective of I see venture capital as investing in the future. That's exactly what we're doing. And we have a real opportunity to create that future as well, because what gets funded gets, and what gets support, access to resources and networks gets scaled. So we have a real opportunity here to make a massive amount of difference in the region. I mean, we're all regionally based. We could talk about this globally as well. So that's one side of things. The other side in terms of the ecosystem is that, especially for programs and early stage, it is really the ecosystem that's the most important thing. We found that with our founders. They can graduate our accelerator program, but honestly, most of the value of the program comes from meeting each other, meeting their peers, connecting with the network as well. And that's essentially what we do is we want to supercharge their growth by giving them access to a whole bunch of networks and resources that they wouldn't ordinarily have. And that's really the purpose of an accelerator program. For us, we have a network of a few hundred mentors. I'm sure Antler has the same. And that's really kind of the value of these kind of programs, is giving them access to these things. And then the curated support as well. So, dedicated entrepreneurs in residence, giving them access to masterclasses or specific advisors when they need them as well. So the ecosystem is a really huge part of the value of what we're bringing, is giving them access to that. I hope that answers the question.
Right. So the connections, the network, the resources, they are very important, right? When you are like a young entrepreneur and you're trying to like grow up your business, launch your startup, right? Your companies are all based in Singapore, but the reach of your investments and network cover early stage startups from all Southeast Asia and also other parts of the world, I understand. Will, your firm, as you mentioned earlier, it is very selective and only target about 6 investments every year or 6 startups to work with. What do you mainly look in a startup? Like when you sit down with a founder, what are some of the questions you ask before choosing that company?
That's a good question. First, I want to say that we are basically all 3 of us here are all kind of accelerators. We're just accelerating companies at a little bit of a later stage, right? When you run an early stage startup and you go for seed funding, you're still extremely small, right? You need to have a continuous set of mentors. You need to have access to the ecosystem. It's really difficult to run a startup. Okay, so when we get the startup, I think the main thing we look at is the team. I think going back to, I think I've done around 55 startup investments in my life since 2004. I think the few times companies fail, knock on wood, usually has to do with the team and not the market or the product. So based on experience, if we see founders that are, happy to take feedback, are transparent, seem to be able to juggle between, listening to themselves and listening to other people, founders that are open to feedback from the market and basically learn by experimenting, because you have to keep on experimenting. Even into Series A and B, you still experiment every single day. You're still a small company trying to match a huge market. That's what we look for. So we do everything in our power to kind of check on those aspects. And of course, we have to like the founders and they have to like us. It's going to be a long journey. And it's going to be good times and it's going to be bad times. So the summary is that we look for the team and the qualities of the team and how they complement each other, even sometimes how they can challenge each other. So we spend a lot of time there.
So yeah, the team is a very important point. They have to be open. They have to, would be willing to receive feedback. Jussi, would you like to add anything to this question?
Yeah, absolutely. So maybe to just add from our perspective, like Will was pointing to, there's multiple angles you look at. The market, the business model, the founders. We take that probably a bit more to the extreme, even to give a lot of emphasis to the founders, since given how early we are, that's all the company has. Business models change, markets develop to different directions. Founders hopefully don't change if all goes well. So, of course, sometimes that also happens. But for us, the founders in the company that's the most critical thing, and we put a lot of emphasis on assessing the founders both as individuals as well as a team and their fit to the business model they're working on.
Right. All right. How has COVID changed the game in the last year, and what are some expectations for this 2021? Like, are investors still betting to inject capital in an economy that is still quite hit by the virus? Jussi, perhaps you can take this one.
So what are hot trends and themes to look for this year? Is that what happened?
Yeah, basically, we can kind of review how COVID has changed the game in the last year and what's going to happen in this 2021. Are we back on track? Are we still,
Yeah, so maybe a perspective from Southeast Asia point of view here, which is I'm actually very bullish, right? And what I think is going to be a somewhat fundamental change in the market here is that the issue in the ecosystem has a bit been that you do a bit more like proven models from other regions, and you do a lot of stuff that involves like human to human interaction, right? And now COVID forces everyone to rethink the type of business model they're building and allow a lot more digital online scaling. And I actually think that this is a big blessing in disguise for the startup ecosystem, because it will bring new types of business models to come from this region, more global, more software businesses. People like will be big beneficiaries of this direction, focusing on software businesses in the region, right? So I think very optimistic about the future, given anyone who starts now will have to think through their business model in a world where you can't travel the same way, you can't meet people the same way.
Right. So you thought about, you mentioned about rethinking. So, right, one advice would be for startups, perhaps working in the tourism industry or sectors that have been really hit. So instead of just holding on their existing business business plan, they should rethink a little bit the project. Yeah, Will.
Yeah, if I want to comment on that, I'm old enough to have been through kind of 3 recessions in my life so far, and there are going to be more. And this is the first time actually startups are somewhat affected by an economic downturn. The 2008 and the 2001s, okay, you could say it's somewhat affected in the .com crash, but if you had a good model and you actually were producing something, you were actually booming. I mean, my startup during 2000 doubled its revenues by, so when you have a black swan event like COVID, where you actually cannot travel and you cannot go out and meet people, it's kind of a different kind of recession. So definitely difficult for some sectors. But for enterprise deep tech, it's been an amazing year. I mean, if you forget the loss of human life. And in terms of funding and capital available, there's more capital available now than any time before. And Southeast Asia is booming like never before. And you even have countries in Southeast Asia that are probably one of the best countries in the world in how they, encountered and navigated through COVID. So from a software, as Jussi mentioned, or from a deep tech perspective, COVID has actually accelerated adoption of digital across the world, and also in Southeast Asia, where you have an enormous gap in how businesses use online services and digital processes to kind of make their businesses more effective and more efficient. So in closing that gap, there's still a way to go, but that is definitely accelerating. Everything from automation, artificial intelligence. We are super bullish on things like medtech, health tech, where we have some really good companies already. So ironically, 2020 has been an amazing year for seed and Series A, B tech investors on the kind of money side, but of course human life and loss of life and health and everything else has been horrible.
Right. So you already mentioned like some of the hot sectors for early stage investment this year. Which one do you think are like some of the strengths that Southeast Asia has as a region to be a place to cultivate innovation? Amra?
Well, there are a lot of problems to solve in this region, and where we see lots of problems to solve, we see a lot of good entrepreneurs coming through. So I think that's one thing, lots of problems to solve. The other is the nature of the ecosystem. Singapore in particular has done a really good job of making itself the hub of the region and bringing in absolutely everything. All the funding is here. A lot of the networks, all the headquarters for big organizations are based out of Singapore. But I also think for entrepreneurs coming from emerging markets who we work with quite a lot, so places like Bangladesh, for example, we've got quite a large percentage of our portfolio out there. The fact that there isn't that much support out there is a good thing for some of these entrepreneurs. They have to really hustle to get things done. Some of the businesses that we're seeing out there are much, much more developed than what would be coming out of, say, Singapore in some cases, because they have to develop a really strong business idea. They have to make it financially sustainable a lot earlier because they simply can't get access to that earlier, resources or earlier funding. So I think, those kind of entrepreneurs are going to be really interesting once they do get access to the bigger funding, especially where some of those solutions coming from emerging markets can be replicated across many other places too. So I'm really excited about Southeast Asia and some of the problems that the entrepreneurs are working on here.
Actually, that connects to my next question, which is Accelerating Asia has adopted like 5 of the United Nations Sustainable Development Goals, and about 70% understand of your startups directly try to address one of these goals. So can you tell us a bit more about this and how to work well the synergy between finances and social goals?
Yeah, the $1 million question. So my background, I used to work for UN Women and ran their global social entrepreneurship program. And I think, when you approach things as social impact first, people have a preconceived idea of what that means. Oftentimes they think that it's quite fluffy. And the other part is they think that you can't make money and do good at the same time. And so, yes, we do have a number of portfolio companies that are addressing the SDGs, and ourselves too. We're also currently going through B Corp certification to kind of embed that in our business. But when we talk to a lot of other investors, even startups, we don't talk about social impact first. We talk about us being a VC fund and an accelerator program, and we try and embed the impact in everything that we do. What I mean by that is oftentimes entrepreneurs are just going out there trying to solve a problem. They're not thinking about social impact. But by nature of where we're operating in the world, there are a lot of big problems to be solved, and they're naturally addressing some of these sustainable development goals. So we don't want to have it as a filter when we're going out there and saying, you must be social impact, because a lot of people don't think about social impact. They don't know about that whole space, and we don't want to be exclusive. But likewise, when there are other companies out there, say some kind of enterprise SaaS business, it's difficult for them to say, oh, yes, I am definitely social impact. We don't want to exclude them, but we do want to encourage them to think about, how can you be a fundamentally good business, not creating harm. Think about your governance, think about your employees, think about the stakeholders that you're working with. You don't necessarily need to go out there and, build schools and all that kind of thing, but you just need to think about your impact on the world, and whether that is negative and reducing that, or whether you can make it positive in some way.
Yeah, that's a very important goal, especially with the time we're running right now, right? Complicated time. Jussi, for all our audience listening and perhaps thinking about, preparing their application this year, what are instead some alarm signals that you see when checking out applications? Like, what's your advice for founders? What do they need to be careful about, or what are like some of the main mistakes they should avoid?
Yeah, no, that's a great question. I think the first question, people who want to be entrepreneurs need to ask themselves is, are they really ready for the ride? It's going to be tough. It's going to take a lot of time. It's going to be a hard grind in the beginning. The second question is, okay, if I want to be an entrepreneur, do I want to build a venture capital backed business or not? That is a very fundamental decision that I think a lot of people don't think about enough. They kind of assume that the only way is to build a VC backable business and just throw themselves at that, without necessarily realizing that maybe another type of business can suit them better. You can become rich and successful by building a business without VCs as well. It's just going to be a different type of business most times. So I think those fundamental questions are something that any aspiring entrepreneur needs to think about. And then if the answer is a yes and a yes on a kind of the VC type path, then just throw yourself at it, like explore what type of thing you want to build, like try to identify something. And especially in times of COVID and times like this, really encourage people to focus on finding business ideas that are not highly capital intensive and that can fundamentally have good unit economics. When you apply to Antler, we're not like assessing your business idea to such degree, and I wouldn't like encourage anyone to try to change themselves, just to get into some sort of a program. So in some sense, the answer is you can't do anything about the stuff that is that we are focusing on the most, which is yourself as a founder. Maybe the thing is that try to find a business idea that you have passion for, and that in a perfect world you've experienced yourself. Then you can actually have better like long-term chance of being the right person to start solving that and stick at it.
Right. Will, yourself, you also founded a company some time ago, Zoomit, that went merged with Kelco and then was sold to Yahoo in a quite large transaction. So if you can share also like one last piece of advice for founders out there, which one would it be?
Oh, one last piece of advice. Yeah. No, first of all, I agree with Jussi that you have to decide if you want to be more of a lifestyle founder or if you want to go the tough route of raising venture capital. I think, first of all, you need to solve something, and that's more of a wish, I guess, but you need to solve something that's meaningful. I mean, you don't have to necessarily be a non-profit or do good as the primary thing, but you have to solve something that's meaningful. And you have to solve a problem that's meaningful and more problematic. I mean, the problem is bigger when you go into the future. Don't solve a problem that's going to go away in the future. So I would say solve a problem that gets bigger and bigger, and which is really meaningful in more senses than just being profitable. And if you do follow those two guidelines, you will most likely hit upon something that's going to be very, very nicely very nice to run. It's going to be super good in terms of also recruiting other people, because you also have to do business that is attractive to your future employees. You have to have a business that the best people will want to work for, right? Not just the co-founders, but also your future staff. And I guess the last piece of that advice is that find a good set of co-founders. I think that's the most important advice I would give to anyone starting a business. I've seen companies fail because the primary founder didn't find the right co-founder, or because the founder started fighting, sometimes about insignificant stuff, because they hadn't talked about the future in enough detail. So if you want to start a business, speak to other founders, speak to people like Jussi and Amra, and speak to me, reach out. There are many ways. So reaching out to people informally, formally, and just build a great team. I guess that's the summary of what I'm saying. Build a great team, solve a meaningful problem.
Thank you. So, okay, we still have like 4 minutes and a half. So I'm going to take like a few questions from the audience. So, okay, we have a question here, which is, in general, how should startups approach investors and how to be more effective in fundraising during this pandemic with everything being held virtually? Amra?
Oh, that's a hard one. I mean, often I've seen the best ones are more relationship based. So you start the relationship as early as possible. Even when you're not fundraising, start developing relationships with VCs. That would be the first thing, because when you are actually fundraising is probably when you need the money for most startups, and that by then it's too late. So yeah, relationships, start them early. I think the other thing is to be very strategic about the investors that you're bringing on. What kind of value can they add, or what kind of, what are you looking for from an investor as well? And take a look at their existing portfolio and their investment thesis too. You might be spinning your wheels, wasting your time approaching investors that are just simply not going to invest in you because of your vertical or, whatever else is going on. So that would be my piece of advice.
All right. We have another one here, which is, what are your thoughts on the growing venture building models alongside some corporates compared to conventional accelerators? Who would like to take this one? Jussi, perhaps?
Yeah, I think maybe Amra would have even the best perspectives on this, but like for me, if we talk about from the point of view of a founder, which might be the most relevant angle here, it can be a very good opportunity to somehow be part of building a venture alongside a corporate if that corporate has great strategic fit and looks at things the right way. The issue with most corporates trying to build something, based on my experience, is twofold. One, there's too much strategic intent, which kills the natural life cycle of a startup, which is not it's kind of anathema to having a market mechanism and like optimizing for the maximum number of investors you talk to get the best investor. And like a strategic intent fights against this. And the second thing is simply like slow decision making cycles and bureaucracy. So if you find a partner in a corporate that somehow is willing to not operate with these two dynamics in a way that stifles the potential company, then it can be great, because strategic value can be real. So it's a very much it depends answer.
Okay, I'm gonna take the last one from the public, and then we still have 1 minute. So, how do we start building relationships with investors or even mentors in the early stages of a startup? Will?
Sure. I guess Amra touched on that, but investors and basically everyone want to feel special, I guess, right? So you have to have a good reason for reaching out to the investors, so that you kind of play upon, why would you be valuable to my business? I'm not saying we have big egos in Cocoon, but we all are human, right? So we would kind of understand that we actually can be helpful, because we like companies where we actually have something to contribute. If we see a company where we don't understand anything, or we know that we do not have the right mentorship network for them, we are probably not that interested, versus when we see that we can really add value to the startup over the next 24 months. When it comes to both advisors and also investors, as Amra mentioned, I think a personal introduction is really good. I'm sure on LinkedIn that, since everyone is connected across the entire world with less than 7 degrees, I'm sure that you are, as a founder, connected to most of your advisors with less than 7 degrees. That's just simple math. So use that power to get a personal intro. And I think also do some research on the people you want to be introduced to. Get to know their background, get to know what they've done. Most of the people you want to be introduced to are pretty public in what they have achieved and what they've done and what they're interested in. So do your homework and show that you have done your homework. And I think that your introductions will be much more efficient.
Perfect. Amra, I would like maybe to just real quick finish. If you can also like give a last thought about this, and we're already like running over time, but please.
Yeah, network. Go out to a lot of events, meet a lot of people. I think the great thing about the startup ecosystem is everyone is very willing to help. Founders are willing to give back. VCs are always willing to speak. So I think exactly like what Will mentioned, as long as you're not, I guess, taking without giving something back in return, that there is a give and take to every relationship, then I think you're going to find a lot of relationships and connections and opportunities will come your way. So yeah, give and take.
Well, thank you very much.
Can I
yeah,
advertise
please.
for female founder mentoring hours, where that we launched in Cocoon last year? So it's actually an opportunity for female founders to meet 4 different venture capital, principals across Southeast Asia. They get 13 minutes with each principal across 1 hour. Because one of the big gaps we need to fix in this industry is that there are too few women applying for venture capital. That's a major problem for value creation in Southeast Asia. So please help us, fix that. And if you're a female founder, please join us for our next event.
Sure. Thank you very much. It's too bad that time really went really fast. So I would like to thank you, all of you, for this time, and also to our audience. And for the people listening, if you want to check more about Accelerating Asia, Cocoon, or Antler, do check their website, do reach out. And I guess that's pretty much for now. Thank you very much, Amra, Will, and Jussi. It was a real pleasure.
Thank you, likewise.
Thank you.
Thanks for having me.